Welcome back to the channel. In this video, I want to discuss a thesis as to why going short the Russell might be the right move this time around. And we're going to be using data from the Commitment of Traders report. Essentially, if your institution is of X size and you trade these many contracts, you do have to report your position to a government agency known as CFTC, sorry. From there, essentially, the ones that are reporting it are referred to as the large speculators, which would be these massive institutions. And from there, we can kind of tell who the small speculators are, which is essentially let's say the retail crowd, or just simply people trading smaller size, because obviously they're going to be the ones holding the other side of the positioning. Just think about it. If we know that there's net 1,000 contracts long, and if institutions are 900 of those, then 100 of those belong to the small traders, just so you kind of understand that. And now I do have an indicator here, a private one. It's not mine though, but it does index that data and kind of shows it to us in a visual way. And one thing you will notice here, so just so we understand we're on the same page here. So these blue bars represent positioning from the large speculators. The yellow bars represent positioning from the small speculators. And then the red bars actually just represent the opposite side of that. From if you combine the small speculators and the large speculators, combine them, take that opposite side, that is what the red bar represents, which would be basically the market makers, because in most cases or not, they're the ones on the opposite side of these trades. Now, what I want us to do here is I want us to only focus into the small speculators for the time being here. So we can see the small speculators, they tend to sit long, net long Russell contracts on the futures market here. And if you look a little closer, we'll notice that in the very last report, now just so we understand, the reports are released every single week, but it's basically up to Tuesday of the current week. So it's a little bit of a delay there between what's happening. But that's why you'll also see like each bar would be like, say, 5 days long or something along those lines, since the data is kind of like once a week, released every Friday. And we can see that just here when we actually ended up breaking out to all-time highs in the Russell, huge boost in small speculators. Obviously, small speculators are chasing this breakout. And again, it's obviously everyone has seen this breakout on a chart. I mean, if we actually look at the Russell index itself, we can actually visualize it and see it, right? We kind of made a brand new high here. We're kind of sitting right at the previous high. So that does look bullish. Go back to the futures here, and we can see small speculators chasing into that of a nice little boost in contracts here. We kind of saw something similar here, as you could see, right? In 2024, kind of sat sideways here, and then we busted out, right? We set up here. Notice how massive increase in contracts compared to where we were, and then that marked the top. Also, pay attention to how when we're at the bottom here, small specs, they were still net long. Granted, they were lessening their position here. They ended up increasing, ended up being almost neutral right down here, very bullish, and then they were essentially short or had very little exposure up to this point. So from down here all the way to up here, they essentially were neutral, and then they slowly began putting on positioning, and now they're super long. The most long they've actually been all year round, by the way, going back to last November. We want to fade this. If I haven't been clear yet, we want to fade this. We're also going to now bring up the large speculators. Now, you might think, well, the large speculators, they must be smart money, but not necessarily, because, again, same deal. If everything's tilted in one side over the other, things can very much easily reverse. Large speculators, they tend to be trend followers. That's one of the biggest strategies on Wall Street. If the trend is up, they keep piling into it, but at some point, there's just too much in one direction. And we can see that, normally speaking, large speculators tend to sit net short Russell contracts. You can kind of see them sitting below the zero line here. Sometimes they get bullish, but most of the time they are on the short side. So from the bottom here, we can actually see, so large specs, right? They were essentially neutral into this dump here, got a little bit more short, but still fairly neutral during this dump. And then they began to kind of short more heavily as we started going higher here. started going a bit more long. We see a decrease in contracts, and now they're going way more long. See, you notice this? They're basically, at this point, they're actually, if you look at the figure right here, they're actually long Russell contracts at this point in time, which happens very, very rarely. We could also see, when was the last time this happened? I think back here or something, maybe, right? You know, same deal here. I mean, you know, they're not going in at great times. Now, normally we want to see both sides end up looking the same. So we want to see the small speculators and large speculators being essentially, what the word we're looking for is max crowded. So they've been the most long or most short in the past 12 months. And this indexing indicator here actually helps us kind of see that. So the look back period is 12 months here. So we can see, just ignore the colors here and the short setup thing. Actually, let me just remove that. Okay, it's fine. Just forget about the colors. But we can see that right now, this is 100 value, this is 0, so this would be max short, max long. So we can see the yellow and blue, which is small specs and large specs. They are both maximum long over the last 12 months. That's typically something that we want to fade. When both of those groups are sitting same side plus maximum, that's a good sign to fade. As we can see here, commercials, which is essentially the market makers, they're max short, which makes sense because the other sides are both max long. We can see situations like this, for example, where institutions are max short, right? See that they're at the 0 line, but small speculators are kind of in the middle, right? So we wouldn't really take a trade on this because, again, we really want to pay attention to what the small speculators are doing, as they're more important to us, but we still want to have small specs and large specs being on that same side and being close to max long or max short. This is the example of small specs not really being anywhere, so we would invalidate any sort of setup over there. But this particular setup here is something that we would want to pay attention to. Now, I do want to mention that, you know, normally just having this is not enough to trade on. You do want to have some other thesis, some other fundamentals to go on that you could trade up against. We have, for example, I think yesterday we had that GDP report come out that was hugely positive. We did see the Russell close down on that day, so that did show some weakness over there. You can kind of maybe use that. Granted, so far rates were lower that day, so you can argue that maybe that also decreases the chance of a rate cut, which does affect small caps, which is very much the case. But generally speaking, if we continue seeing weakness in the Russell over the subsequent days, we are stuck in the holidays right now. You know, if there's another piece of information, I think even like today, I mean, again, small information here, but even today, I think the job numbers were kind of fine. Initial claims came in lighter, as you could see, which is positive for the markets, and the Russell is kind of struggling today a little bit more so than other indices. Granted, the market just opened up though. But if it continues to struggle, I think opening up a short position here in Russell is a pretty good idea. I have opened up a bit of a starter position, or at least a position that I will keep a very tight leash on, which is right here, the Russell contracts. I'm short 2 contracts at an average price of 25.60.95. So again, based on the fact that, you know, large specs, small specs are crowded long right now, we did have, if you watched my previous video, I kind of discussed the fact that spot vol is very depressed compared to VIX futures 3 months from now. Normally that does lead to a pop in volatility in the short term. And if I'm looking at these indexes right now and I'm trying to decide, okay, where do I want to be short? I would much rather be short an index that has maximum crowding in one direction over the other. If we look at ES, for example, we can see that small speculators have been maximum long S&P since October, which is right here. But notice how large speculators, on the other hand, have kind of been dilly-daddling in the middle here. They have not been increasing their positionings or really reducing their positionings. There would be no trade here. There's no actual crowding occurring. If large speculators, again, that blue line, if that blue line were to have gone up and been closer to 100, that would be a whole different story here. But again, if we just look at the blue here, that hasn't been the case here. And let me see. So then you have Nasdaq. I think Nasdaq is a little closer. I'm sorry, I can't even see the charts here. Okay, so if we look at Nasdaq, notice how Nasdaq, we actually had crowding occurring in this region here, right? So small specs were basically almost 100, large specs were like at 92. So both values are over 90. That's close enough to be calling it, very high crowding. And this was basically Nasdaq was over here. We did see a quick, drop here, and Nasdaq still hasn't gotten over those levels. We still see maximum crowding occur from the small specs. We could actually see this, in this case now it's white, but these white bars have actually continued to go higher. So small speculators have increased their position in Nasdaq, but large speculators have reduced their positioning. This reduction here, and I guess small specs increasing a little bit, that kind of explains why we had a little bit more of a pop here in where commercials are standing, which is at a value of 6. And then lastly, Dow Jones. Dow Jones. We have a picture here of small speculators being maximum long, and then large speculators being very close to maximum short. So if anything, the Dow Jones is probably the most bullish position to go into. You do have to, I do want to mention this, that when it comes to the indexes in particular, small speculators tend to almost always be long there, right? That's just a natural position for, say, retail traders to be in. So when it comes to indexes, we have to understand the fact that there's always going to be, we always kind of expect bullishness from small speculators. If they're ever bearish on an index, by the way, that is when there's super fades. That's the last thing you ever, last thing that retail is ever correct on is a position where they are bearish on an index. But that is basically all, right? So we make our video here. We see what the Russell is. It had a little bit of a drop this morning, but has recovered for the most part. I've kind of stated my thesis here. We are in these holiday days right now, so we may not really see too much volatility whatsoever. It's no one out there trading, being at their desk for the most part. But I do expect this thesis to kind of work out over maybe the week after some of these holidays pass. But if you enjoyed this video, if you found it helpful, please leave me a like. Other than that, I'll see you guys next time.